but I'm gonna keep watch on this.
All right. I can see in the very short term that we've managed to pop out of the top and consolidate in the middle with a pop out of the bottom. Managed to complete that movement. Check out where the 61 is on this move. Just close by. We're almost at the low of the node. Another blue line that I find really interesting to be hit soon. light blue. Roughly the same kind of distance on either side of it so far. A little bit less on the bottom. And it has made another expansion by breaking through the support line. Third consecutive low puts a lot of emphasis on the first of the three. So that also is another major level. So there's that level. Little B point a little higher. Oh, there it is. Boom. Beautiful. All of the targets are hitting. And I mean, you know what's funny about that is if you're still in from the bottom, you didn't get wiped out at all if you kept your stop at the extreme. But if you took that back to the blue lines, I mean, now you're in for the break of the major downtrend again. If it comes to get you, then it's like you've never taken this trade. Should you still be in for the break of the trend or not becomes the question. But essentially, enough can be taken off right now. Like I took 5 and took 3 off and managed the other 2. Testing the blue line from the other side is absolutely acceptable as well. Like, when you take 5, I mean, you can't just start the day with that. It's too much risk. It's like how could you explain yourself, right? But if you've been taking 3 successfully and you managed to move them, like if you took 3 successfully here and managed 2 off and let the third one rip and you know, if you manage to take that off or hedge it or whatever you manage to do, if you've done it successfully, you made money, right? So if you can use that money to justify taking another trade, and even if that other trade loses, you're still profitable by a little bit, then you can take it. Because even if you were to lose, you'd still have even, maybe even $10 from the first trade. It's like you're still up something, and you can justify taking the risk within that previous cushion. You're using part of the cushion, and if it doesn't go well, you have to build the cushion back up again before you can try again. You have to be very particular about where you're going to increase your size due to the fact that it has to be done only when you've essentially earned the ability. It's like if I could make a trading platform, it'd be like, all right, well, you trade with your normal allotted amount, and then it would unlock the ability to trade more once you've actually successfully proven that you can actually make the cushion and then use it, and it wouldn't allow you to use your whole cushion, just 75% of it, and it's like unless you were doing it properly, you wouldn't be able to do it at all. So I'm like, and I would have no problem with it. Nobody would really. I mean, it could be quite frustrating if you didn't know how to do it properly. But if you know exactly how to follow the rules and the program like pushed you towards it and didn't let you go out of line, that could be useful for learning at least. Um, well, but I just think it's a matter of sometimes I think it's good to be a little strict with yourself when it comes to the rules that you have and make sure that they're clear. And the more clear that they are, the more strict that you can be with them. And I think that's important because they're there for a reason, for protection and protection mainly. Because without protection, it's dangerous. That's the idea. Now, of course, everything has come back to the yellow bar again. Now, as I mentioned, this is not like a 61 area or nothing like that. It was just, well, ironically, it is the 61 to this dump, or close to it, very close to it. But I don't think that it's used like that. It's more like a medium line. It does not like that level though. Like it likes to get to it and it likes to struggle with it. When it breaks through it, it likes to get it from the other side. So when it does break through it again, right? Getting to it from the other side is really, really kind of like it's doing that test with the blue lines from the other side. They're notorious for getting tests from both sides on a regular basis. It's continuing to get tested both sides. The distances that it's making on either side getting so small that one could assume change is near. pretty controversial point because it's like an H, you know. Does the H return to the B point of the W? Major question. new B points are formed. Yet again, we're testing the same red bar that we did earlier, also a trend line from before. Short-term targets hit. This is the major red-yellow line at the top here. Check out Meta real quick. Grinding that medium bar level, about to test their low channel. I think the Nasdaq is going to respond at the same time. Curious. Sure.
and the hourly were just passing a 141. On a smaller fib set to the right of it, actually, we're at a 261, just poking past it. But
The hourly. It's back at this medium line again. Very interesting. Which is one of the original downtrend lines there. I suppose actually that B point has been untested. Very close by. Almost at the B point. Very wicky and spiky in this environment. Candlesticks are starting to increase in the rate of change. Making progress in the range. Definitely getting closer to the downtrend. I'd like to see the break of the blue line as well. That could end this whole kind of environment. It's all about the blue line, which is still a ways away. The B point finally got hit, and it left a third consecutive low. So you can watch the first of the three, very beginning. the first of the three. Constructed by the previous downtrend line, where that line comes from. Along the curious about today at the change of the hour, what we could actually get, because we know that there is that increase in volatility typically. So I wonder about today, with it being an eventful day, be an eventful turnaround or an eventful change of the hour. Because way up here, we do still have an untested white and line. Of course, every line on the chart will have to break in order to get there. It's funny that on this chart that it managed to increase on that high, because it didn't for me. I mean, NQ didn't increase at that high. It is now. And on moves like this, it does make me question the SPY as well, because they might have a different fib or a different B point that we could be coming up to. In this case, we can see that on the SPY, it's got a 188-200 that's like almost at it right now.
And we're just about at a 188 on the Nasdaq.
Nasdaq, yeah. This one is the same kind of B point here. Except this one is a little bit different. Multiple times the short-term target's been hit.
Just missed that 188 down there.
Yeah, it did. I consider it hit though. I think we broke the trend off of it.
Looks like a falling wedge.
Yep. There's an absolute precision test of that blue line. Shows the importance of it. I do believe we will break it. The 188 is confining it into a little area between the blue line and that white line at the bottom. This little range in. Question becomes, could this M have a W? Another thing that I've noticed as well is a lot of the consolidations that have moves like this, they pause and they wait for everyone to get in. They might even pop up a couple times, but they like to stop everyone out before they actually reverse.
What time's that meeting at?
It's after the close.
Yeah, 4:35.
Like I mentioned around 11, that get a little bit of a drop off in the ATR. Guess it was exactly around that time that it started dropping off, and here we are at 8.9 ATR. Average candle size has dipped down so that it can rise back up again for the end of the day, because it certainly will. With all the events and such.
Yeah, the whole time market's been going down. Microsoft and Visa have actually been going up.
Hmm.
Kind of weird, really. know, but Meta and Google are tanking.
Mm-hmm.
So that's why.
Been scalping it. Not exactly the best, but it's profitable. Hey, that's some volume. Attacking the gap. So much space though. You get to the red yellow. And it's like, remember, it used to use this red zone and green zone in here. And I mean, it is to a certain extent. Just, trying to leave, to be honest. And like, hedges could be on the table, but you want to be really careful. There is a first of the three right there. I got filled on it. Did put your order on that high if you did hedge it. Get filled right now. Now because of that hedge, I can take my stops on NQ and move them a little bit lower. Because I made that much money, I don't need to protect it with a stop anymore. I can keep more exposure on my long trade now. I can actually move my stop down a little bit. So it's still profitable, yet it's below my average price now. My stop's in profit on the edge, so if it goes down, I've got the high. Like, there's no better way to do it. Take some more off the hedge. Ding ding. The hedge is profitable now, no matter what. So I can go trade on another account now if I want to. Till this is done playing out, if I touch it, I lose. But it's designed to make me money. If I just maintain one of those positions, it's gonna rock. If it's the bottom one, I make more money. If it's the top one, I'm still in and I get to buy an even bigger position, or I get to get the same position back. Take some more off there. That was the last order I had in there. To take profit on the hedge. I've already taken off enough NQs at the top to basically justify holding. I'll play with the house's money. It's interesting how much it's decided to put on top of this node. This was an area, or this gray zone. This was an area that used to be a gap, like I said. So it had a volume gap like we have here. Another thing that I just wanted to check was, because we had a consolidation here, we had a spike on the top that originated the entire move, and that spike formulated out of the bottom, somewhat similarly to how it did out the top. Another thing that's intriguing is by this time here, it will be the case that it will have to break the downtrend in order to return to the B point. The blue line again. Yep,
Jeez.
about to be over, I think. I think they're trying to attack the high of the node, trying to fill orders up there. Change of the hours coming up too. The controversial 1 o'clock that seems to increase volatility. So let's see if it does today. Here we are filling everything at the high of the node. Might just like quick snap fill everything, so normal.
That B point with that gap there, right?
Yeah, on the other side of the big gap, yep. Kind of sweeped everyone out like I was explaining before.
Very nice.
Yeah, it's I did mention that it did it before on this last one. Kind of like just stops everyone out. Thing is though, this one isn't reversing right away. And it's become the time that I was interested in. This is the controversial time. Let's take a look at what Meta is doing. They definitely didn't to that box yet. They're just grinding this range still. This is actually still. It's definitely affected more. The Nasdaq is affected more. What's going on? Coming up to the green zone here. The other indexes aren't so much feeling this one. Short-term trend break. Just past the 161 there. It looks like on the bigger picture.
It's pretty close to Monday's low.
Yeah, very
Just a few points away.
intriguing.
Retracement.
What's up?
Talking about a harsh retracement.
Mm-hmm.
It was like 300 points up.
Interestingly enough, it is still on the green zone, and if it is that level that it chose to reverse off of, then it really shows something about the green zone. The blue line's done its job again of holding it back for now. Finally, the other side of the blue line. Hitting the B points. And that's my positioning again. So literally, take off enough each time. Put my stop at the extreme. I moved it down a bit, but not too much, and that was because I was shorting it. And yeah, with that, I've managed to off quite a bit. I'm gonna take some more there too. I reversed my hedge. Had some more buy orders. The lower it goes, the more cushion that you have, the more you can get, the more targets you have. Is it not true that because we go down even farther, we leave more B points? Well, how am I supposed to have some to sell at these ones if I've only got a few? You know, at the end of the day, like this one's the target. There. Pretty normal as well. We're inside of a gap. It all just spiked right back up beautifully. I managed to buy a bunch more MNQ on the dip. Yeah, this is kind of like a shakeout right now because I think it's coming to the time where that major downtrending yellow line is starting to become uh, at risk of breaking. So it's been known to buy more time with spikes before the consolidation. So it's really important to make sure that you have enough off when it's profitable. Reminds me not too long ago about the Amazon earnings that we had. This is the 188 I'm not sure if I was muted, but that's the 188 that basically goes to this major key point up here, and we were talking about that not too long ago. So the green zone potentially having the same kind of consolidation that it had in the red zone. We did this kind of here, but it wasn't much of a consolidation. This is appropriate because it's related to the red zone. And if it chooses to use it in the same way that it did originally when it was constructed, this right here could work as a red zone for the small range at the bottom. I also want to point out this move as well. 1, 2, and then it's an S wave, right? The move we were going over not too long ago. But essentially we want to keep some emphasis on the top there. I know this is like a short-term VWAP. We haven't really seen it yet. And of course, every single one of the trends is going to have to break in order to get us there. These are short-term fib levels. I can just mark the 261 and turn it into a gold line. Take these off for now. But basically what that does is put a little bit of a gold zone in this area here. So like we know that between these two levels, it's got a 261 and a 261. We can just leave it like that for now. This was one of the first trends of the day. If we go back here, I've dimmed it out because it was originally one of the symmetrical triangle lines that we had. And we can see it came down and hit that level inside of this green zone. So in the short term, this is a relatively controversial level, not just because it's a B point, but because it is the high of the red zone in this small short-term range. It does raise the question of, you could see how much we decided to spike on the top and then use the consolidation, and then we spiked on the bottom as well. Like that maybe in the picture here, because it is undeniable that we do have a spike on the top of the red zone. So I do consider this. And making that spike out of the bottom wouldn't be too far past the 261 and the 200%. So like these two levels are really important reversal levels that relate all the way up to this level up here. So exposure to it could otherwise be pretty lucrative. And I just want to point out that 200% I was just talking about, it's in line exactly with the 261. So stretching to it, but maybe, not making it all the way could be on the table as well, because it is going to be a wick and spike zone. We have to watch out for that, see how it acts when it gets into the extreme of the range. Another thing as well is the volume is very minimal, which is a good thing. Means there's going to be less people in the way of the reversal. And it's interesting too, because tomorrow, or days that basically don't have an incredible event happening, like what's going on tomorrow? Is there, double check that. But as far as I know, today is more important than tomorrow in terms of news. Let's see. 26th. Oh, no, 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 no. Amazon's tomorrow. Sorry about that. End phase is tomorrow. Intel tomorrow. But yeah, tomorrow's a big deal too. Now we're in that wicks and spike zone, essentially. So the short term 261, we're not quite the same distance at the top that we were at the bottom. And it looks like we've done a little bit more than wave 1 or 2, which is fine. At the 261 here. It's first response, not likely to be the last. Of course, it's tested from both sides now. Both sides evenly tested the 261, inching closer to the break of the yellow line. Keeping an eye on the high of the node. Volume node's growing in a strange way. We also have to consider the change of the hour. The last one was quite significant. Reminds me of a smaller version of the other consolidations. They've ended with this kind of movement. Turns the low of the consolidation into a target in the short term. There you go. The short term lows are all hit. Allows for a pretty easy scalp. And it's like we're doing one of those moves where the entire node was basically robbed of their position. Now we go for the target. And it's too high for them to chase, hopefully. They don't try. If they do, then we have to come back to get them out. But it's taken half the consolidation now because they can tell that nobody's trying. Yellow line becomes something of interest, and it's roughly the same distance out the bottom that it made out of the top. Certainly spiked back to the green zone like it did back to the red zone. Took the same time. And if you've already taken off contracts to pay for the trade, then what you have left is good to go. Not bad. Now no stops are to be dragged above the B point, which is the basically no stops are to be dragged above the green. Some to be taken off. For all those stops that were into the. What a better earning that's gonna. Testing from the other side finally. Still the case that stops are safe above the green.
How's everyone? I went and worked out for the first time in a little while. It was pretty good.
Nice.
Yeah, I injured my elbow, and so I'd been babying it for weeks, and man, oh man, I'm getting old. Things don't heal the way they used to. Hmm. I would like to point out that that Head and Shoulders that you pointed out at NVIDIA played out exactly like you said it would. NVIDIA at 9 a.m.
Nice. Oh, yeah, they've been tanking.
Yeah.
AMD, they look like they're reversing now. The index is at their green zone. The red zone is huge. I mean, this little spike right down here, like I was explaining how the lows become short-term targets, and essentially it led on into the trend break. Like many of the other consolidations of the day, like this one right here, it just had like this spike and then a rally. We could take most of that move back before actually running. And it looks like we're like trying that same kind of sequence where essentially we went sideways, then we spiked down, went up, and then rallied back down again. And it's very similar to what we did at the beginning of the day. And I think it's going to be different in the sense that it gets us back to that point. Like that's the beginning of the red zone right there. And I think yeah, sure, it might get to the underside of it, but I'm not going to complain if it gets here too. The irony is that it could do not only this triangle right here, but the entire consolidation after as well, before actually getting there. The funny thing is this VWAP is likely to be somewhere around the B points by the time that it actually does there and close the gap.
make the 61, eh? On the retracement there, short term.
Oh shit! Yeah, I was muted. It's the deepest part of the gap though, so it's did
Not only
like that.
that, it was the bottom of the 15-second RSI. It jumped up just like it's supposed to.
Yep. Yeah, I see that there. It sniped it. Yeah.
Yep. I've noticed when it starts going up like that, John,
hmm
you gotta be really like in tune as to where it is and what's going on because it just like you said, snipes it and then takes off.
Well, I noticed that on this low it hit it, but on this low it didn't. But this low is the entry. Like I mean, it can come
Yeah,
back for this one. Not
yeah,
100% about this one.
yeah. I'm not using the 15-second like at the very bottom. I'm using the 15-second once it already lifts off like it did and it comes back.
Yeah, but then you're going to be part of the retracement in the future, though. Like it's not. It's going to mean that if we're if
Yeah,
we're
I know what you're saying.
if we get up to the
But
target,
also, yeah,
then then that'll be above the.
yeah. And you had divergence like on the very bottom there. There was divergence. I didn't catch it. I caught the spike before it,
Mhm.
but I didn't catch the second spike. I don't know, I was sleeping or something. But you could see there was divergence there, and that was coming off the 188, actually right off the 200 from the bigger fibs on the, I think it was the 15-minute.
Yeah, because when we get to that red zone, this low is going to be the 78, which could be fine. It
Yeah.
could be fine. Could be fine. But God forbid they use the range again. I mean, that's the benefit of being in from outside the range.
Well, I would have had it if I wasn't sleeping,
Yeah.
right? But yeah, what I'm finding is that even this morning, like when it took off, it was taken off from the 15-second RSI at the bottom,
Yeah, I've been
and it's starting
watching
to
it
come off.
as
Oh,
well
good,
after
good,
yeah,
good.
after what you said yesterday and stuff. I've been watching it every now and again and seeing how it's been responding to it. Um like it was a consideration for me in here at that low cuz I saw that it hit it there. I wasn't aware of it hitting here, but it did hit it there. It went through it there, which is weird because when it went
Yep.
through it, it actually
It gets,
sucked.
yeah,
It
it gets
was
your
better
attention.
when it hits it.
Yeah, yeah. It gets your attention. Like when it first comes off, like when we start going up here, okay, and when it comes back down, it's going to come back down quick, okay, and it's only going to spike there right quick and then go up, and then you know this thing's going to go up. But as we get further and further along, there'll be some slight hesitation at the 15. Well, there might be some slight hesitation at the bottom of the 15 seconds. So, but this is definitely the better place to take it. You know, when everything's so low.
hmm Well, another thing that I'm like a big advocate of is buying, before the trend breaks. And in this case, this, it could have been here, and I don't like it as much when it does that. I like it when it's still under the trend. Because like it's not, everybody that buys after the trend is undeniably late, right? Like at least the market seems to treat them that way. Because like, what is a retest if it doesn't just instantly, notoriously take everything past the trend break back almost every time? And I'm like, well, sometimes it doesn't, but I mean, it's within its nature to. So I'm like, I'm not gonna ever drag my stop in its path of being able to retest. And I mean, why buy in somewhere where it's gonna potentially retest too? It's like it's always good to be in from below the trend. And
Yep.
that's okay.
Oh, there's definitely a skill set involved in that, in finding that, right? And I'm still
hmm
honing my skill set on that.
Oh, 100%. Well, it's a never-ending
But
process.
in yeah, but exactly. But in the meantime, I still want to make some profit here, and I want
Oh,
to
100%. Yeah. If you
make
see
some
the
money
value in
elsewhere
the
as well.
trend break, it's like, do you want to find a way to be in, and what's the best way to be in, and how can you be in the safest
Yeah,
way possible?
exactly. That's exactly what I'm talking about. The safest way possible that you're going to be in profit, right?
Yep, exactly.
I haven't seen a time where I haven't been in profit when it's going up, so
Exactly.
it's worked for me. So
Yep, yep. And now it's like I can't remember how many times I've tried today, but they're all erased from my memory. Every single one. It's this time, only focused on this time. And it's like all the rest of the times I can't even tell you. Like imagine 3 days ago, like what the hell was going on then? I have no idea. But I'll tell you, if you showed me a chart of it, I'll tell you I recognize it, but not my personal experiences or how long. Like if I have to try 150 times because it just keeps persisting, and I'm like, okay, well, if the target's still there, if the trend's still there, if it's become even more profitable for me to capture the same trend break, I'm like, well, technically I do get paid more to capture a trend break that's farther away from my target. Like, it's 230 points now. If it made a new low, it would mean we got more money to get back to it. Like the 261 inevitably means more money. And if the 188 doesn't work, if I've been stopped out with a profit 5 times on it, doesn't mean I'm not going to try the 261. Doesn't mean the B points disappeared, right? So that's like the major thing. And it really makes you question: is if somebody else was pushing you to make money for them, they'd be like, why did you stop? And then like, well, like I think for myself, I'm like, well, why did I stop for myself? I'm like, well, I shouldn't have. And it never and because at the end of the day, you saw the value in the trend break, you know why you were trying in the first place, and just because it made it difficult doesn't mean that your personal experiences with it doesn't mean that it wasn't a good thing to be in for by the end of it, or a good thing to work towards, to be exposed to. And it's like it comes down to, am I exposed for the thing I want to be exposed for, and is it safe to continue with it? Simply.
Catch the bottom, you're always looking for a secure, safe spot that you can count on to go in the direction that it's going in, right? So
Yep. And I made the point earlier as well that when we do continuously make new lows away from a target, it does make a point that those targets, one, become farther away, and two, there might even be more targets, because as it falls into new lows, like take these ones for example, like after seeing all these big targets and everything, you wouldn't think that the very 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 low is like, I even said it was easy when it was in that point. I was like, it's an easy short-term target, but it can turn into a really long-term trade. Because the idea isn't to sell the whole thing, but to make sure that it's safe to continue holding anything else past that short-term target. So like if you take three, it's a tough environment, and you take two off there and you have one, well, you have one. And that's what counts. And obviously that's using the least risk possible and the least size possible, but it is undeniably the safest way. Like imagine you took 10 and took 9 of them off. What with the last contract, how far would it have to go down before you could see a loss on that? So I'm like, size, it's not really important, but whether or not you're in for it is the major thing. And as you've tried more and more times and you've built up more of a cushion, you can afford to do things like hedging it. It becomes an not an opportunity, but an option. And um and that's the interesting part about it is, if you get into the habit of hedging, then you get into the habit of holding your core, and you get into the habit of actually taking it to the price targets. But if you get into the habit of hedging and you get knocked out of your core, you're not out of a position because you've still got your hedge. And that means that the hedge can be used to leverage a new core position. And that means that that core position can be taken with a little bit less risk than it originally was, because it didn't originally have a short trade backing it up. Like in the event that you're wrong trying to buy your core back, you're still going to be making money on your hedge. So it's like, it's a good thing. And then once you're safe in your core again, you get your stop and profit, and then you can focus on managing out of that original short trade if you think it's not going to help you anymore. And sometimes it works out, sometimes it doesn't. Like today, I sold it out to go long, and then and ultimately took that up and then got stopped out and didn't go back in. So I was like, okay, well it would have been better to keep the short, but I barely had anything of it, so I saw an opportunity to go long and I took that instead. So it all depends. Sometimes there's different opportunities that can arise mid trade, and being able to capture those rather than just watch them play out is huge. Because like, the back of my mind, I've always got this entity pushing me to do better, and analyze my current situation the way that I am. Why do I trade this way? How can I improve? And what how can I maximize, on what I'm doing to make it more efficient, to make it safer, to make it quicker, make it seamless, not really quicker, but seamless, like easier to implement, so I don't have to freeze up and think about it as I'm doing it, because I already know what I'm supposed to do. It's become a habit, right? And and it takes repetition to do that, and that's and you know what takes you know what repetition takes is discipline, because it really does. If you're going to sit there and repeat something knowing that it's not going to give you any immediate gain now, it takes discipline to have the patience to do that, because you have to say, right, I'm not going to throw the money into it right now because I don't know what I'm doing and I have to practice. And it takes discipline to do that. And it's a good thing, it seems like, there's a culture around like it's kind of shameful to not know already what you're supposed to do. But like I say, it's nobody's born with the information. I'm like, I don't care where you come from. You don't know how to trade as soon as you're born, right? You have to learn either by doing it or by being taught it, right? So you have to learn it somehow. And that's one major thing. So there should be no shame in finding out the answers to unanswered questions, to making sure that you end the day with no curiosities and just understandings. Like that's, I mean, I just came up with that because I'm like, it makes a lot of sense to me. Like that's the motto, because it's the most effective way, in my opinion. Of course, now I am interested in this movement here. The S wave has come to an end. I'm like, where did we see this before? I mean, I swear we've seen this literally right here, like that. Except we've got up and then S wave, and then this time it had a little bit of interesting uh to it. It had a W into an M. Both of those patterns are terrible, and you kind of see it in this one too. And then both of those patterns are terrible. It's like the M was cut off and the W was apparent. Why is it the case that that is the case here? The M seemingly not capable, W capable. And the distances that we have between the two are different. See, we've done S waves before that are nothing like the one that we're in. The one thing about 5-wave moves is, in theory, the fifth wave and the first wave are supposed to have some similarities. And in the case that we can see now, even with this one, although this is not an incredibly similar size, it's almost double. Well, it looks like it is double, but they are both predominant trends, not part of this movement that meets back at an equilibrium, but something that advances the trend, the overall yellow trend. Very short term, it's like it's on its fifth wave. A little bit of a downtrend can be drawn. Like we could watch for the low of the node to lead to the high of the node, and so happens to be that that node is exactly working within the confines of the green zone and red zone, the POC being on the green zone itself. Could move really, really nicely, to be honest. See, there's a gap there as well on the short term, on the high of the node. Essentially, the gap begins, and like I said about this area when we first got here, right? We could do something similar to what we did on the top. Now, the top, it had a confinement area very similar to what we have now. The spike that it had to begin is also within the same confines as the spike that we have in relation to our trend. And what it left in was also very similar in the confines as well. There was another time that we made this move, and it separated the small one that time. So it's definitely a distance or two distances that the market has been frequently showing. Now, undeniably, there have been some trend breaks. And the one that we have here that's broken, that was otherwise holding for a long period of time, has been readjusted to a new downtrend with the new pullback that we've made. I question whether or not they will change how this consolidation works as opposed to the other ones. Because each other consolidation that we've had, if there is any upwards movement to it, it has involved jabbing everyone out before that upwards movement. And in this case, those that are in from the low can withstand a jab and shouldn't drag their stops anywhere near the low of the node. But it is something that has been common. This one might be a little different though, because it is in the green zone, and how much it's willing to spike out of it could vary. I think that we might see something like a head and shoulders to an inverse. On the short-term picture, because that's one way that we like to consolidate, really. You know, ironically, this is a pattern that's been known to reverse the trend entirely, but now I see this as an excuse to go sideways because it hits the same point 8 times while it's doing this, so it's hardly really going anywhere. 8 times does it hit this point. And like what people get excited about are spikes that ultimately return right back to where they came from. So the best thing about this is when it ends. just like many consolidations, while it's doing that, returning back to the middle is one of the most normal things it can do, or the mean in general, which I think it's appropriate to place up here. At the end of the day, the two distances have made themselves apparent. There is a smaller node down here as well. Something to consider. I also can't help but notice the amount of equality that it has had alongside the blue line. This particular blue line. I'm gonna make it dark blue, because when we started this, it was at the beginning of the trend also, and it wasn't long into it that it became apparent that every move either began or or doubled, at that level. So basically, when we would find distances like this, we could see that those distances could become really common to make on both sides, and we've even used them in the past to make those distances away from the uh, the trend, and if not very 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 similar distances. So we can see that now it has been with this trend for quite some time, and we can see there's one difference that it has never made before. The distance that it has made between testing the trends has become increasingly more dramatic. Also, this distance here that we've seen has, taken the lead with how far it's capable of making away from the blue line. Another dead giveaway is this pullback right here, not making it all the way back down to the blue line. It would involve an entirely new low if we were to get there. So what a big change to not come back to that level in the event that we make it through this high, having not tested that level. That would probably be one of the biggest changes throughout this trend. So all based on factual changes, not opinions or whatnot. It's actually true that this distance hasn't been made since we've started the blue line. It's been made around it, which is interesting. The distance altogether that we made on the last movement has then decided to show itself on either side of the trend. The work of the public? Highly unlikely. But at the end of the day, it makes it increasingly difficult to remain or obtain a long trade. And I can't help but remember, not too long ago we had an Amazon earnings report. Sorry, we had an Amazon earnings report that basically was tanking the entire day just to reverse it all on the close. I wonder if something is similar to that is happening. That was the time where we had an Amazon retest, as I call it, where basically a trend can break and then retest at an entirely new low just to get to an obvious target, that they would make otherwise clear, kind of thing. That's how that was formed. But it's like the audacity, right, to make a clear reversal point and then come back just to do a retest even lower and then get to their target. What does that remind us of? The beginning of the day? Well, not that this was an obvious target or anything point there, but it was a green zone, and we had to get through that barrier to get any higher. There was a downtrend, and we had to get through that to get any higher. So when we were in this consolidation at the low after a major dump off in the morning, all of the long trades that were otherwise accumulated in this giant node right here at the POC had to endure, or they were stopped out on this pullback before it came up and smashed the target in a 5-wave move that was ever so clear. And it's interesting to see that, going back to the beginning of the day, this was a really important pattern. All right. And the third wave is notoriously the largest, and it's the smallest, ironically, now. So it's like that's something. And it's consistent. Within this trend, it's been that way. Since we started this red yellow line, which I mean it could go back to the top, it essentially has acted this way. And on the break of that line, we may see that it may act differently, as a new trend can have new characteristics, just as this one does. So it's good to consider those things. So with this movement here, the one thing I was thinking about was like it making a head and shoulders to an inverse head and shoulders. And I mean, if we look at how it's made a right shoulder here, if it even has made a right shoulder, it's terrible, right? Like if it's trying to pull this pattern off, very straightforward. That was the idea, but it's almost like instead of the right shoulder, it has this like kind of 5-wave move going on. And it's a move that's quite uh, intriguing because it's managed it down to the 78 or around that area. 78 exactly. So it made it to the 78 in the old 261. It is true that that old 261 is in line with the long-term, the 200 that's 230 points higher. So in the event exposure is captured to a trend break from this level, the value of the trade could be upwards of 230 points. It's intriguing, for sure. No wonder it may seem so difficult. Because that 230 just grew from 200 and 150 basically to get to this point. But the one thing that's intriguing about that is the journey that goes back to that B point can never be considered until we truly break the trend. It has to be broken in order to get there. That's the controversial. Take a look at meta. So here we are grinding a POC made at the bottom of the channel. Is it not interesting that out of all the volume presented here, that the most volume seems to be at this point right here? I'm sure that will change if I consider more. Wow, not. So this is still a distance for the break of the downtrend. Of course, it can never be seen until we break the downtrend altogether. And basically, this is highlighting the fact that it originated in an area that could be viewed as a channel like this. This distance right here, this point, is equal to this distance right here away. So basically, I take this movement right here, put it on the other side of this, what it does should get to the other side. Again, with this level, what I'll do is I'll just mark 261 and remove channels there. That Of course, any hedges that are made are definitely overtaking the bottom at this point and can be used as a tool to leverage back into a core if you lost it. But if you keep your stop at the extreme, you're still safe at, depending on the entry, of course. But if you went for those original lows, did you know that that being a short-term target, it came back to the target, not to the entry? Both of those short-term lows are snagged though. Like if I put B points on them for a second, you can see that it basically just came back and grabbed them both again from the other side. And the only people that are still safe are the people that valued those as targets. That's the interesting part. The it reminds me very much of how we design the green zones on the daily lows. It reminds me actually of the daily red zone and green zone, as a matter of fact. Because it didn't reverse off of a clean, swift spike out of the green zone either. Like it did this. Deja vu. So another intriguing thing is, you know how like in this environment here we were making rising wedges a lot and they all came back to the highs, and this one actually tried, but it never truly hit that blue and white line. And hitting that blue and white line would still be inside of this channel. That channel just gave me deja vu heavy. Wanna know what? This channel down here. Remember it clear as day. Even the thing that it reminded me of the most is that we even moved like this at the beginning, like we did here. Approached it with a staircase, like we did here. Came down hard, did there. Three distinctive lows. This one. Can't see, it's distinctly three lows. 1, 2, and 3. Intriguing. What was that? 13th of March. That doesn't, I can't happen that day. But
Yes, man, and Google that are tanking big time today.
let's take a look at Google. I mean, Google's doing exactly what it should be doing. Unfortunately,
Amazon's
yeah,
down like 8 points, 7.5.
yeah, Google just came back down to test their 188. Like let me post a picture of Google. So interesting because with Google, they came to do everything that they should before they got smoked. Check out Tesla. Tesla's at a really centralized area, having fell out of their triangle. Now, what's interesting about that triangle and how it's fallen out of it, it looks like it's actually used this movement right here again. Not suspiciously particular, to be honest, but as to this. Intel not tomorrow? Yeah, Intel's tomorrow. They kind of look like AMD. Oh, no, not really, but choppy. Been going relatively nowhere for a long time here, it would seem. But this, they've definitely felt the Google report there. Now, the thing with Google's earnings report is it had a little bit of a decline off of the 188 originally, right? And we can see that it didn't get to the B point under any circumstances ever. And we can see clearly that it's respected the 188 200, clearly that it's respected the 261. But it comes down back to the 188 200 and makes this an equilibrium instead. It's taken this exact portion right here, doubled it, and returned back to the middle. And it's done this around a level that otherwise is going to be made, it's made itself known now pretty much as a level that could be seen as an equilibrium. And the entire move is subject to coming down to hit where this began. I'm like, is it not true that if we were to make this move here, that is how we make head and shoulders every time we make head and shoulders? We go like this. And it uses these barriers to make this kind of movement. So is it possible that we're interested in responding to that node and then bouncing off of it to hit the same shoulder level before coming down? And I'm like, well, I think so. We've seen even on Google's high that it's somewhat interested in making a high with a higher high and a lower high and coming down. And it broke through the bottom, roughly using the same kind of distance that it made on the top. I'm like, well, look at that. How simple, right? But at the end of the day, it's also part of a five-wave move. 1, 2, 3, 4, and 5. But it wasn't your ordinary one because it carried on going down and then down and then down. And it's like, oh, you didn't catch a reversal. So it's like, it's tough. It's tough. It's tough for sure. But that's no different than what it did on the daily of the Nasdaq. It made it tough too. But did you know that by the time that it got to this point right here, this trend was already there. It was there through the entire time. It was there through all of this, and everybody get to see it all here and here. All of those people were aware that they when they went long, they could have value in being exposed to that line when broken. Especially if it is to be a red zone and green zone, you know, as I anticipated it would be, because it never was used ever before as a red zone and green zone. Never. This is the first time we've ever managed to gyrate from one side to the next. So that's good. Good understanding. Not sure what's going on with the blue here. Hold on. Back on the daily. Take this giant channel off because basically I drew that channel in, so it's like, okay, now I can actually take it off short term. Now the chart stretches out like that so much because the VWAP that it was originally using is all the way up here, which seems like way far away. Now the one thing that's interesting about this is that every single time that we have went sideways like this and then popped down, and cleared every long trade out, even if it's come back, it made a new low until now. Now, what is intriguing to me personally is the fact that under no circumstances have we ever succeeded at getting on top of this level. And in the event that we do that here, get on top of this level, um, that would be quite something. Because any time that we ever have gotten on top of a level of similar sort to this one, it's amounted in new lows. Change of the hour in under a minute. Volatility could increase. The trend did break yet again. But what is also true is that it brought another one. Basically the same trend that we had here. That was riding across these highs. Broken yet again from here. And now again to like, okay. Now, interestingly enough, what I mentioned about the blue line before was imagine that we could get beyond the distance that we went underneath it on the other side, but more. When have we ever done more? Because we've always done one distance below, but we've never managed to do more, you know, than just one small step, right? What about two? And what a better time to make two than a time that we can't even get back to test the blue line. It's like, where did this come from? Because I mean, we were so good at testing the blue line, no? And it's like all of a sudden it's doing this now, and I observe this because it's like it's very very important to say like I can prove it to you that it has changed. So I'm like, well, is it not true because of this change we've managed to go the longest period of time without advancing to a new low because of it? And what could that be saying? What would happen to momentum after spending such a time? Is it the amount of time that we spent when we started the trend? And what could that do? Was that enough momentum to begin it? Could it be enough momentum buildup to end it? It's an interesting thought process, right? You really have to think. How could I not think that? It's like we have to cover that. It would seem obvious to, right? Logical to, you would think. And if there is something that can give us an indication, um, to make sure that we're aware of the changes that we've been having and actually be able to factually prove that, hey, our relationship with this blue line is changing. Its inability to get back to it, and if we were to continue past the high, having not touched the blue line, like where'd that come from, right? We've never seen that before, and I'm like, well, that's a hell of a change. What else is going to change? Because of all of this now, we've managed to stay here as long as we started the trend. Did you know that this is what's going on with the momentum? And I'm like, well, the momentum was crappy and not really diverging as much, but now it's diverged more significantly than ever before, more so that it makes me want to check a longer term time frame, like the 5 minute. I'm like, 5 minutes been changing too for quite some time, but now it's started to really change so much that I'm interested to see if I can get change on the 15 minute, where I can see now that ever since we were involved with the green zone, the green line's been coming closer to the orange, and it inevitably has been changing. So obviously the histogram's been changing since like, halfway through the dump, but that's the first thing to go usually on the MACD. But I'm like, okay, well, with all this change, don't be surprised if we change the trend. Because it's clearly not doing what it was when it was in the trend. So that's a good point as well. And to assume that it is doing the same thing uh, could be neglecting the facts of the situation. That's my point, right? So like I guess you could call that developing an analytical mindset. Because it's like you kind of have to be stubborn about it in a weird way, because you want to keep picking at it. You're never completely satisfied. Cynical a little bit, almost skeptical, I guess you could say. And it's good to be that way because otherwise, if you don't ask the right questions, you might be too convinced about some sort of opinion that's not actually backed up by facts. But hey, did we not go into making a head and shoulders to an inverse head and shoulders earlier? This is weird. Not gonna lie, but do you see it try? At the end of the day, it's true that in this case we have a left shoulder, a head, and a right shoulder. But it's true that we have a left shoulder, a head, and a right shoulder. This is one of the most common ways to make a triangle nowadays, which is kind of intriguing. Best thing about it is when it ends, like I said at the beginning. Because damn, is it not like, well, it's not too bad, but it's going to be better when it ends, 100%. Whatever move it has to offer when it ends will likely be bigger than any move that it has offered in the past hour and a half, maybe.
I was doing emails and I had you turned down. Were you talking about your time shifted triangle?
Um, yeah, like more like a head and shoulders to an inverse head and shoulders here, and
Oh,
we've been grinding this green zone for quite some time now, which inevitably has been placing a node right on the bottom. I noticed that Meta was doing the same thing there as well. Just gonna grab my coffee real quick.
oh yeah. I guess there's a Fed announcement at close of the market, so all the
That's it. Yep.
crypto selling off.
Well, that's not even more eventful than the Meta earnings. The Meta earnings are going to move the market, I think, a lot more than the than the Federal Reserve thing. Does it say exactly what it is? Like what is it like the minutes or something like that? Because if it is, it's not going to do anything.
What do you
If
mean?
the Federal Reserve, is it like an actual meeting where they're coming up with new information?
So
Oh, sorry, what was that? I cut out, I think.
just a speech. That's all.
Just a speech. Okay, yeah, interesting.
Well, they'll make an announcement about interest rates, and so the big thing for tech companies is a lot of them have some pretty big debts out there, and their commercial loan percentages are going to go up if so their earnings look weird, and nobody likes that. So
Interesting.
yeah, no, I had my fiduciary call me this morning and tell me that hey, there's going to be all this action. So yeah, I already told you this morning.
Mhm.
No, I don't know that he knew, but he was sensing it for sure.
Yeah.
It's funny. He's interested in what I'm doing now that because I talked to him about it. He's like, "Oh man, that's watching. I don't know. It's different than what he does."
Yeah. Send him an invite.
Right? I should.
This is totally reminding me of how it treated the daily lows as well. It's coming back to make it so that it's the slightest advancement possible. And tomorrow, I find that Amazon could certainly be bigger than Meta as well. So I find it's going to be more eventful than yesterday. It must, because yesterday we had two contradicting moves and the market kind of just went sideways, grinded down a little bit, but it ended, the heavy volume right where it started the heavy volume. So I'm like, and anybody that was part of the downwards movement was really trading derivatives. You couldn't, I mean, the stock traders couldn't be part of the overnight movement or nothing. So
Yo, I'm back from work.
yo yo.
Yo. Anything to potentially update me on here, or?
Yeah, yeah. 2 seconds. Okay, so we have basically tested the green zone to this giant channel here, basically, and the red zone hasn't been seen off the green zone yet. So I'm really interested in that. I remember mentioning as well the VWAP can be connected to the B points by the time that we're interested in reversing to them. I found that this is a phenomenon that I've analyzed many times, and I'm like, well, it's very quite strange actually how it works. But that VWAP connecting to that B point is almost the case now, and by the time we hit it, I find that it's likely that that is going to be the case. But we're going to go for that B point, very likely, I think. And the funny thing is that's not the only B point in the area. Like this level that we've been grinding on down here, essentially at that low, is right at a 200 that goes 230 points up to this level up here, uh the B point. And the B point itself has never even fluttered at its retest. Now the interesting part is there's also a blue and white line that's never been tested either. So of course, in order to get the exposure to the red and or sorry to the blue and white line, the red and yellow line will have to break first. So there's no use expecting that to be able to become a profit target until we're positioned for the breaks of these short-term trends. Like we know we can't be involved with the red yellow line unless we're in for the yellow essentially, or unless we get to it somehow. And of course, there's a lot of space that we have potentially from now until then. But the earnings reports are coming out. I'm going to put in a marker. So this one's going to be the imbalance. This is the first point of the day where we want to make sure that every single position we have is profitable and stop is set at a profit or safe, and the positions um, that are made after that point, if any, should only be hedges, I think, and profit-taking orders. And essentially, because this is 10 minutes until the close, and I'll tell you when the reports actually come out today, just to get an update with that. So 4:05 is going to be the most interesting time of the day, 5 minutes after the close, which is interesting because Meta, Facebook, will be releasing, and we're gonna have some weird ones coming after that, like IBM and stuff like that. If something was seriously wrong with them, they could affect the market, but it's actually quite unlikely anymore. They used to have so much more of an impact than that they do now. But if they moved like 50% or something, oh yeah, the market would feel that. It'd be like 200 points or something. But if they just move like 10% or something, it might only be like a 50 or like a 30-point move on the market when IBM releases, and that's underwhelming for such a big company, right? So maybe I'm underestimating it, but they've always disappointed me. So
I mean, as long as that stops in profit, right? You're safe pretty much either way. So
Exactly. And the beauty of it is the farther away that you're positioned while the report is being released, the safer you are to be in for the report. And if you've already got one direction down, then that's half the chance that you're going to be in for the large move. And
Yeah, exactly. So you can either make a little bit of money or a ridiculous amount of money, right? So
exactly. So it's like it's a good way to, the first step is having a plan, understanding what you want to do, and having an idea of exactly what the best position could look like, and is that possible for you to be positioned like that, and how what are the steps that you could take in order to make it so that you can. And in this case, this is a pattern that is actually very common coming up into a imbalance, let alone a giant earnings uh, report, but a triangle that makes it quite difficult. But as you can see with this triangle, every single time that we've managed to uh, make a low, it has managed to slightly, ever so slightly, advanced beyond the previous level, and to the point where it's made this triangle, and it's come back so close each time. But undeniably, each high and each low is getting tighter and tighter into the tip of the triangle. Where we're now, we could expect that it should start to be interested in leaving the triangle. And of course, on leaving the triangle, its interest in coming back to this particular triangle is very high because of the fact that it's likely to return to the mean for the imbalance. Now, the majority of the view apps that I have are actually above, and this is just a short-term view app, but it also is above, and that's okay. We have a new trend here too, so check that out. Short-term downtrend. It's like I like to keep levels like the blue line on there because if they get unrealistically far away, um, you know, could they be used as extreme levels to test uh, on times like the event? Yeah, like I like them for that. So, they can be tested with absolute precision, like we're seeing this last major trend break here. I find that it's doing something really similar, like that, on both sides, and the amount of distance that it has is very similar. So, I mean, the time that it spends doing this could be similar. And I mean, honestly, it could do this movement again. You gotta watch out for this movement. It happened times. Almost like they turn the robots off at that point after this amount injected in the market. Oops, triangle on there. Because I mean, that's one thing that I don't like to, if you sit down and you just start trading or something like that, and you don't recognize that there's a triangle there, it's a deterrent, literally. Like the triangle is a deterrent, and it's a good thing because it keeps you out of trouble. And if you wonder why it was difficult for you when you tried to trade an area like this, it's because it's confining into a tighter spot until it leaves the triangle altogether. Of course, the stop at the extreme has been the safest way about this consolidation since the beginning. Of course, with the risk that there's spikes and wicks out of the sides of the consolidation, many people will be avoiding putting their stops at the extremes. But like I said at the beginning of this consolidation, I think it's going to act differently than these ones. Because after all of those ones being so particular, it's not going to be the same way for long. At least I find it incredibly unlikely. And it's likely to change on something different and do something that's not the same thing over and over again, giving the same result. But it'll provide the same thing, give a different result. And it does it almost every time it changes. And it's like with the head and shoulders to inverse head and shoulders in the environment here, all that that's managed to do is continue the triangle that it set up the baseline for originally, which I suppose I could even like move that. Because one argument towards it not being a flat bottom triangle would be that each low that we have made has been a spike. Now, interestingly enough, each low that we have made has been a spike, particularly back to this equilibrium here. So much so that it is even apparent that this distance that we have at the bottom is incredibly similar to the distance that we have at the top. And everything has been centered around this equilibrium for quite some time, and most of the moves have returned back to that point. Of course, we're testing the limits of the triangle right now and getting ready to leave it altogether. One thing I cannot help but notice is the beginning of the day. I can't help but remember the first triangle had an S wave to it. I can remember explaining that, and that was the deal with it at the beginning. It really did make that S wave, and ending the triangle with an S wave like that is pretty normal actually. Seen that before many times, so I'm curious about if this one chooses to act the same way or not. I can think like I'm under the impression this is one of those thread the needle moments where they're trying to make sure that everybody's out of the way so they can give it a little bit of a pop and see if anybody's willing to chase it. That's what they want to do. But undeniably, each time that they have tried, 1, 2, and 3, it's all been shot back down to a point where I think that they're going to try and move it slowly now and not try and shoot it up because that clearly doesn't work. Every time that they shoot it up, it just trickles right back down to where it started shooting up from. So shooting it up is a good strategy, clearly. The one thing that I'd like to see with the next major movement is not an incredible retracement, but a sideways move. And something that takes this and doesn't do this as much, but does this. And I mean, there can be a breaker in between where it's like, all right, I'm not going to do the full pullback, but I'm going to meet you in the middle with this much, and then we'll be fine. And that's fine. They're trying to thread that needle right now, trying to make sure that they can get that position off the ground. And I think that they're going to be met with many chasers yet again. The faster they move it, the more chasers that they'll get. Because if they move it up slowly, then people may feel as though it's too late for them to get in. And if they start pushing it through a point like this, the chasers won't be able to handle a 61% retracement, and we could take them out that way. We could make the blast part higher than where the 61% retracement will be. Makes it really tough for them, and I think it'll work. I think it's something that's going to actually be employed in this environment. So let's see. Slow to begin, quick to end. Takes back all the quick part, all that's left of the people in the slow area. Not like it's easy to be part of the slow area. It's like you must really want it kind of thing. And that's the impression that I got on the daily. I was like, what is this? Like you see on this daily here, how it all started, it was congested and it was like, yeah, we got this and everything. And then it runs to the trend line that's in question, the big bad trend line, the number one trend line, and effectively has a negative response to it. Negative response. And then comes right back to it again and it's like, oh, here we go again. Negative response. It's like not even counting the huge negative responses that happen on the next day after the low, and then after that, and then again. And even when we were on our last pullback, the major trend made itself apparent for a while. And, everybody that was trying to grab it there, and then again was met with a negative response. You had to grab it again from a new low. Talk about tough. Because these people that were here at the bottom here, they were right. But it was too tough for them probably. That's like the thing up here. This trend has been visible from this point up here. Yet we came up to it and did what? Responded negatively, no? Doesn't mean it ain't gonna break. And double. But get back to the one line that is important, which is this equilibrium. And I think that rising wedge deserves a test, and that's absolutely fine if it does. It's almost like we've come back to it from both sides like that. I like that. And quite a controversial level. It's certainly not at the extremes on the daily. But here we are, slowly breaking the trend. And perhaps a negative response to the red yellow line could seem rather appropriate after all I've just said. I think that they might be interested in it. Especially the faster we move to it. We can start slow and do fast about halfway of the move, right? We'll take back half of the fast part. So if we did that, right, went grindy, 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 and then started to make it fast, this would be a W, having come from an M, no? And it would be interested in taking back the fast bit. It would be like playing back to the W's B point. So we could do that. It could be really crappy as well, but I'm watching. Let's see. This is the first time that it's managed to rival this other side of the triangle, and can't help but notice how much it's went out of the bottom. And could this rival our ability to go up? I don't think so much. It could insinuate the need to retest the triangle to make equality and such, but no, let's push through it. I think they're greedy and they want to see more. If they get people out of the way, then they're going to build on that. And I think a lot of people feel like they're late, so they're not buying, which is good. That means they're not going to be able to sell, which means they're not in the way to anybody that has bought. Like that clear skies environment. That's why it's made so tough from the obvious point that it was going to reverse. So tough on those people that literally have the best price. It goes back and back and back. And it's like if you caught the pullback, then we come back on the pullback. And if you caught the pullback's pullback, then we come back on that pullback. And it's like, geez, well, what's the safe thing to do then? Keep your stop at the extreme, but you did that here. You did that here, and you did that here. But this line's never broken. And now, being exposed to that line from a point down here is worth far more than any point in here. And effectively, if you get to a point like this and you can make it safe to continue holding with a stop at the extreme, if that stop gets hit, then you've taken off enough profit now to pay yourself. So that when it gets to the target, you can still take some off, and you can afford it to come back to the extreme. And at the end of the day, if you focus now, instead of on that position, on another position that goes against it, one that could take trades as small as this one back to the tip of the triangle, you can afford it because you've just basically acquired a position that benefits if you're wrong. But in the event that you're right, you can make small profits on small pullbacks like this one. And you get your stop and profit on that, and it's like, well, if it makes a new low, you're still going to get into that new low, right? Why not be short for it though? At the same time. And it's not a necessity, but it definitely makes it easier. Like I say, it's like using a chainsaw instead of an axe. You have to read the manual for the chainsaw, or you might chop your hands off, right? But with the axe, it's pretty straightforward. Somebody could shout from across the room how to use it, and you would pretty much get the gist. And it could be more powerful equipment than what I'm referring to, and Yes, but essentially, there's much to be said about understanding the best way to use the chainsaw. You get a lot more done, yet it is inherently riskier for the people that do not understand how to use it. And it's the same way for hedging. It can seem scary to the people that don't use it. And that's the point that I make. It's a tool that it has to be used properly because it's otherwise dangerous. And if you're in the habit of using it, you're going to get more done, and you're going to be safer in the long run than you're going to have to use less resources. You can get more done basically, and that's the main thing. You get more out of it if done correctly. So that's how it all goes. But right now we've managed to make it pretty even around this triangle, and it is undeniably at the view app. But something that's interesting is happening on the view app. For once, trying to work as a support. After all, look at the other temps. Well, I can't say for once because it was kind of used here as a support, and it was kind of used here as a support. But if it's not doing that, then that's great. I like the idea of it not doing that. That's terrible. Because what that is a failure of using support. It used it for how much time? It used it for this much time, and then it ended up going down. So let's get through this much time, because then we can't say that we're doing this anymore. So as long as we're not doing this, then we're good to go. Because we're certainly not doing that, or we'd be up in the sky already, right? At the end of the day, it's got only minutes left, a couple minutes left before it's impossible for it to be doing that. Because what it did here was lead everyone on, and we mustn't think that this isn't capable of doing that too. So it's good to make sure that we're aware that it took that much time, and exceeding that much time makes us one step away from it being that thing. And that thing is bad, so it's good not to be similar to it. That's the logic of the consolidations that we have right now. And I'm like, well, we get to this red zone inside of, sorry. We get to this red yellow line inside of this red zone. That's asking for trouble, especially if we have open B points below. Like, think about it. If we run into a red zone with B points asking to be hit down below, all it wants is a 188 up there, which I'm sure it has right near it. And I'm like, okay, let's see what it does. Started slow, ended fast. All the fast bit gets erased. Remember from the beginning. People from the slow bit are the people from before the trend. People from after are the people that got excited about the movement. It wasn't even for them because they weren't in the right spot. Very interesting. So that's the way I find the best, clearest understanding that I can rely on in an environment like that. It's like it's very black and white in the sense that want to make sure that you're positioned for the red yellow line break at all times, and you're aware that it's difficult. But the expectations were that it would go slow, so we're comfortable with that. And then it goes fast, but we're comfortable with all the fast being taken back. And why is it that as soon as the trend broke, all of that fast bit got taken back, and now we're fast again, and this can be taken back too. But the trend did break, and now we're that much closer to the red yellow line, that much closer to the POC and the imbalance. The tip of the triangle coming, well. So what's the importance of getting through the tip of the triangle? Well, first off, the need to come back and retest it is eliminated. It's true that in this case, we've already tested the triangle and it made that clear. So does it need to do it again? No, but it can. At the end of the day, I wouldn't obstruct its ability to test the triangle. However, I'm not going to complain if it doesn't. I'm certainly not trading towards it, so. This is the high of the node, so anything that we can do now is like, this is knocking into new uh what's the expression? I don't have one, but it's in a new area. It's in a new area altogether now. We're not familiar with this area because it's not spent much time in this area in this consolidation. So could we expect that the ways of this consolidation could change if we leave the confines that kept us in this area for so long? What are the odds that things change when we get out of this confinement area? And what could change with it? Well, the thing that's been made so obvious while we've been inside of this area is the first thing to change. And I'm like, well, what could that be? The idea of us being confined within a small space. Okay, yeah, that's going to change for sure. What about doubling it? Becomes another thing. Because it's true that, this is a W and everything like that. It's great and stuff, but what's the node? The node is big. The node might get doubled. Not this just little crappy triangle. What about the whole thing? And I'm like, I like that. What's up here? We got another node up here. I- You know, whoever's doing this, they are going to be aware of that node. They are going to be aware of the green dash lines. And I think that we could have a little bit of a negative response to the red yellow line. That's fine. Because it didn't kind of flush everybody out on the last move. As I said, I think it was going to be different, and through the entire consolidation, we were building on previous lows until the end. It had a little bit of a flutter out of it there, but it's fine. That didn't change the fact that the red yellow line was there. Didn't change the fact that all these B points are still there, nor that the red zone or green zone is still there. And I did reference many times on the daily that the same way to use a green zone effectively to get us all the way through to a red zone could literally be the same difficulty that we've experienced on the short. Very impressive. And I'm like, you know how steep this trend is? One thing that's beautiful about it, how on earth did they manage to make it so there's so much time? With the steepness that it has. Now, of course, there's another trend here. No time with that. Could that advance us closer to this one? Of course it could. We have to be careful with this because now, how do we acknowledge the red zone without spending any time at it and without moving down off of it? Could it be the case that this trend just breaks to readjust? Because remember, back in the day, well, back in the day, back over here, this used to be a trend too. I'll take some of these other ones off just to show exactly what's going on. I'm going to leave that blue one for the earnings report though. And let's see. Yeah, so I took this trend that we're on right here, and I've placed it down here, and it was relatively similar to what we were doing before we readjusted it. Is it not true that this line had to be readjusted to get our current support line that we're on? You know? And it kind of faded out, right? Into a line that was of a different angle. Now, could we be doing that same kind of fading out that we did originally? Because I can see that since this trend started, there's been a few different characteristics. One, this trend pullback has been the only size that we've ever made every time that we ever pull back ever. And when we go up, we make a relatively similar move, which is honestly double the size of the pullback. And when we made the last pullback, notice that it doubled nearly again to get to the next one. So I'm like, gee, that's really, really obvious and really, really straightforward. And I'm like, the closer that it gets to the trend break, the farther that it's went in consolidation, the more difficult that it's been for the average individual, the clearer it will become. More simple it can be without obstruction of the public. But when there is obstruction of the public, we get a little bit more chop. We get a little bit more, like, no B points sitting regularly. We get a little bit more uh, wicks and spikes and such.
Well, the 27 to that B point down below. W.
The 227? Yep. Red yellow line's definitely getting some attention soon here. Just like we readjusted this short term line, we readjusted this one so far. Doesn't really change much though, not at all. Another way to look at it, different perspective. Take this area here, it's actually taken the support, put it out the top. Remarkably precise about it too. And I mean, what could it mean to do more on one side than the next? You know what I think? I think 341, 361 of that bar I just put in there. 341, 361. The gray zone. Be up here somewhere. Uh, well, actually, you know what? It's basically going to be 3 times the size, I think, by the end of it. We're almost approaching the second distance now. But it'll look like the B point up there too. Unacceptable. And it reminds me too, this blue line, it was hit in the past. This one up here, it was never actually hit. Like never. Like I would like to see it move from the blue line to the blue and white one. That would be a hell of a... And I'm like, okay. Let's say for instance it managed to break the red yellow line on this steep uptrend. Would it be effective for the amount of longevity that we could have? Like I'm like, no 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 no. So you know how at the beginning we had a run up and then it dumped down like that? And effectively it made this trend here safe to run up on. It turned it from that one to that one. It made it safe to run up on. It was able to run up on it again, right? And essentially, this entire move could have one of those and take the risk off of this trend, lower it, and then break this one. Because what breaking it on a steep trend like that, they want it just to come back the whole way. I'm like, yeah, that's what's gonna happen if they don't do it properly. So making sure that it's on a decent angle is good, and they set this up really well. And if they just do a bigger version of that, it could be something like coming back to the VWAP from the other side. After all, could we make this effort here to come back, right? Or no? I mean, it could. It's interested in readjusting the support to say the least. The more it readjusts it, the better. And from the institutional perspective, but the individual's like, oh my goodness, I don't want to see it pull back on me. And the institution's like, oh, the necessary pullback would make the red yellow line break so much easier because we wouldn't be breaking it on a steep trend like this one. Because they know that if they were to keep running this trend up higher and they didn't readjust it, you're talking the whole move comes back. So the steepness brings weakness. And I'm like, okay, we have a W, and it's somewhat coming off of an M. And I'm like, you know how it did that M? It did that M with a trend. I call this an audacity line because after all the efforts it's put in and everything, this line to be the line that it chooses to break instead of the big one, I think that there will be more movement on the break of the small downtrending line than there will be on the upwards. But of course, here we are coming down to break the trend and hit the VWAP and B point and such. The VWAP is something that could prevent it from getting to the B point. So we're testing this white VWAP, and it's kind of like an anti-volatility area. It could flutter around it and end up getting the B point. But this pause is definitely like normal, and I'm gonna put in another B point up here too, because that B point just formed. Obviously, this one down here is hit now too. Go ahead and take these fibs off actually altogether, and now my interest does the blue line. Interested in. Now, of course, this is an attempt at trying to get to the 61 in conjunction with the triangle, but there's a lot of weight in needing to get back to the blue line and instead of doing the thing that it's used to doing. And it respects the VWAP and the blue line, which is a change. You know, because it's trying to make changes and everything, don't expect it to do the thing that that's been working, you know, very, very much. That's something I've really noticed. When they take full control, they don't really show the thing that's worked for all the individuals throughout the entire day very much. So I'm curious about this. You can see the anti-volatility VWAP working as an area to flutter around prior to getting to the line as well. The 61 is on top of the POC and the triangle. The green zone ends at that point. Everything beneath that point has been wicks and spikes. This is that point. And the next move that we have into the imbalance may only be a fourth wave to get to the blue. On the break of the blue, it's directly interested in the next red-yellow. I can't help but notice that on the last major downtrend break, you could say that that's the high of the triangle. When we look at a major downtrend break and it comes to a 61, it has been a controversial movement that has led to many trend breaks in the past. Definitely like the distance that it popped out of the top of the VWAP has been seen to try and make that distance out of the bottom of the VWAP to make that 61 happen. And of course, every single thing that it's ever done underneath that VWAP has amounted to wicking and spiking back to it. Deja vu all over again. Except one thing I find different is the jabs towards the people on the bottom have come to an end. As it's been very difficult for the people in on this low to maintain the same composure. Look at it come right back to the blue line. Every single bit of movement that there was underneath that VWAP amounted to it coming back to the blue line in the short term. I'm like, want to know what's interesting about this one? No crappy W to come up on. I don't really think that the B points that are down in here are going to be incredibly significant in the future. It's not even that bad if we manage to test them quickly before continuing. It would actually be quite good. But getting on top of this red zone is going to be one of the things that I'm for, and points above, of course, on the earnings reports. Take a look at here we are at the medium level on Facebook. There's all the targets hitting on Nasdaq without Facebook. I think that Facebook has went down a lot to make people into sellers and otherwise make sure that they aren't in the way for the reversal, because a lot of people will buy in anticipation of being able to get exposure to the earnings at the end of the day, and if pretty much they've done that at any time after 1 o'clock, they're going to be down for the earnings. So. And after their pop, they could certainly erase it as well, but I do suspect them to be popping. Regardless, the one major position to be in is to have a long trade and have it hedged for just like yesterday. But that may be difficult to do depending on where we are 10 minutes from now. At the end of the day, it's 5 minutes after the close that they release, and market right now is not even responding to any of their movement whatsoever. It in fact is moving exactly opposite Facebook. Keep in mind that Facebook as well will have an imbalance, and just because Facebook has a negative imbalance does not mean that the Nasdaq has to respond. Their imbalance move is subject to being taken right back as a spike to the equilibrium middle. One thing about it is it could be even with the spike that it made on the top, like we would often see in many patterns similar to this one, just like so. Also, the gold bar is not going to be out of play either. Surprisingly, it's still equilibrium, the medium line, I like to call it. The level that throughout the day today, it has only managed to have wicks and spikes below it, including the large one, which managed to come back right to that area so it could be so well. But like I said, this entire movement subject to being taken right back. Facebook. And coming back to the tip of the triangle could be exactly the same as coming back to the low of the channel on Facebook. And as Facebook takes back the spike that it's made, market can return back to the. That'll happen. That's the white line, by the way. Just like that. We'll move. And Facebook as well in sync moved right back to the gold bar. But you must remember that it must be made safe by the time it hits a short-term target on the Nasdaq, but over 15 points should be well more than enough to secure a profit in the event that you're not already in. Of course, trading so close to the event and the end of the day is inherently riskier than any other time of the day. Of course, the red yellow lines still remain, and exposure to them is the only way to the B points above. We do need to break those lines in order to get to any green dash line. That has been the case since the beginning of the consolidation. A negative response to the medium line, which I do believe we will test again here in a minute. And break. Nasdaq definitely picking up in its movement. The ATR somewhat increasing a little bit from the low. So here we are with the second attempt. The Nasdaq, it looks like it's more capable of testing its UAP than Facebook is to test its medium point. Regardless, as I said, Facebook will make the jump. And if that affects the Nasdaq in an even more positive way, then that's absolutely fine. Testing the blue line on the Nasdaq from the other side could look like testing medium bar from the other side. Something of a possibility. So if it is such a possibility, then dragging your stops in the path of any blast are not a wise idea, especially if we've seen how it's treated anybody that's dragged stops up rather than keeping them at the extreme and paying themselves by taking off enough profit to secure that exposure. 4 minutes until the close. Must keep an eye on the time. The close itself can have heavy volatility. Of course, many people that want exposure to this earnings report will be, having to make their decision, up into the close here. Of course, many options traders don't want any decay on their trade that's going to expose themselves to earnings. So sometimes people buy options in both directions, and if there's enough volatility, you can sometimes even profit on both contracts. Depending on if the volatility holds into the next day. Now, I did mention it would get back to the medium bar on Facebook. Funny enough, it's not affecting the Nasdaq very much, but it's getting there. I mean, Nasdaq will wake up and start moving with Facebook like it's best friends in a second. Don't worry about that. The imbalance might have made it seem like they're not moving together. That was just, honestly, I think it was like a trick on the people that don't know about the imbalance, and they can see that maybe being positioned with the market is not going to move with Facebook, and I think it's just a trick. It's totally going to move with Facebook. Are you kidding me? So, definitely. We can see it's even trying to now. Yeah, I'd be shocked if it didn't, honestly. So, that'd be one for the books. some sort of a drastic movement right up into the close to try and snatch anyone out could be seen. So the spread increasing right at the close is something. So if you have any stops that are hovering around the VWAP, they're subject to just being absorbed in the volatility right at the close. So beware. Stops at the extreme are safe, and if they're not safe for you, then you have to take off more in order to make it safe. Because like I say, if you have 10, you took 9 off here, is the last one safe? Put your stop at the extreme. Yeah, it should be. Even if you took them all off here. So I'm like, well, is there a way to make it safe? Becomes the question. You might not have that as your way. Hopefully not. That's a rough way to do it, but it is a way at the end of the day. So in the event that your stop gets hit on any existing exposure that you do have, your account won't be affected negatively. It'll be affected more positively than if you hadn't have taken the in the first place. So comes down to Facebook demanding that people find value in it till the end of the day, because it says nobody's allowed to buy today and be profitable into the close unless you caught this low, unless you demanded that it would come back to test this point, unless you understood that this move would happen. I mean, it didn't even happen on the Nasdaq. Look at how it cared about that. It really didn't do a good job at all, did it? That didn't work. Like, where is it? Interesting to me that if I draw a shape that size on Facebook, it copies over to be that size on the Nasdaq. It's nowhere near. On a second, actually, just curious about something here real quick. Let me just take this right here and copy it again. I just want to that move. Wow. Okay, so that the market during that period of time was moving twice as far as Facebook was. I mean, not to lie, Facebook was moving like absolute crap inside of that little area there. 1 second till the close. The close had a little bit of a pop to it, a little bit of volume to it. Of course, that's normal that to get the volume, but the pop is intriguing, and it's one step closer to the red-yellow line break, something that many people cannot be exposed to unless they can trade after hours. Like we're getting some action at the close there. Facebook's kind of following the market up right now, which is kind of interesting. Now we must watch out for the break of the entire downtrend. I'll make it red-yellow. That's like the deal here. We're looking for a nice big move on Facebook. Get that whole thing going. We're going to shoot right through the freaking top here. Anticipation move right off the bat. Facebook earnings does not get released for another 5 minutes. Be advised. That is a major piece of information. So yeah. The entire move that we've had here at the close could be a little bit of a chaser retracer back to the medium point before any kind of continuation, so beware of that. That's what we're getting there on Facebook, so we can see that right there. I used to trade Facebook every single day. As much as I don't like the company, I'm familiar with their movements. And it's not that I don't like the company. I just think the world would be a better place without them. It's not their finances or anything. They're probably gonna do fine in the future. But I mean, I'm like, why? I'm like, this sucks. But they should take their money and give it to productive companies. But that's it. We shall see how they do on this report, though. Yeah, it's like take all of Facebook's money and give it to Nvidia. World would be a better place. But that ain't gonna happen. Heck, it would seem like Activision could use the money. They can't produce anything good either. Two minutes remain. We're at the second trend break on the Nasdaq. Alright, let's see. Facebook or Meta. What kind of movement are they going to have? Make sure if you don't have a hedge, you might want to consider getting one. If and as soon as you can drag your stop into profit, you should. But also consider the fact that the spread's likely to take you out as soon as it releases the earnings report. Also, there's a chance it's delayed, which does not mean it's not going to happen. Does not mean it's not going to move. You just have to watch for it. All right. Ten seconds. Also, there's a chance that in the event that it hits the level immediately, it could reverse immediately. So any orders that are placed there, we want to make sure that we're aware that the reversals can happen fast on earnings, and stops need to be dragged quickly on any positions that are profitable. And on the Nasdaq, it's easy to drag your long stop up into profit. You capture a hedge for the report, should become profitable in a second here. Should be less than the core. Delayed response though, like I said. So hedges, you can drag your stops down into profit, manage to grab a stop in profit. If it knocks the core out, then we can look for a new one. Facebook certainly ended up dumping, but their move can be retraced right back. Watch out for that. This is a move that's a little bit farther than what they managed to make in this one. You can see the value in grabbing a hedge. At the end of the day, if you got knocked out of the core, grabbing a core is not an incredibly bad idea. There's a new point that's in there. I expect the entire move on Facebook to be taken back. Or on the market at least, sorry. Facebook is taking itself back too. And there we go. Beautiful. Anybody, if you took that long, you want to make sure you're trimming some off right there, because at the end of the day, we want to keep this, drag that stop into profit, make sure that you're safe to continue holding it. And you know, the more you take off, the farther down you can keep your stop. And knock that one out pretty clear. Facebook is managing to almost back at the blue bar. I believe we're going to come back to that blue bar very soon on Facebook. I'll make it even clearer. And then we're going to go out the other side and blow through my freaking yellow line. Just making sure nobody's in it first, making sure nobody's in the market first as well. And then they're going to take everybody's position and make it profitable. Just like this. And it's like, I don't even care if Facebook doesn't play ball. We're doing it. So as soon as they start to play ball, I mean, this is going to work even better. So that's the deal. We're working this. Facebook's going up. I don't care what anybody says. Just wanted to make sure everybody's getting out first. Because this is a hell of a move in the wrong direction before it actually takes it all back, eh? And now, what did the market do? You know, if the market was anything like Facebook, it would be here at a 61. But where is it? Not at a 61. IBM, what's going on with them? Just real quick. They felt it in the wrong direction. They're about to release in 2 minutes. Oh, they might actually move the market a little bit there. Because, like, Facebook sent it right back where it started. Nothing, nothing, nothing crazy there. But hey, we're interested in getting to that red zone. We're interested in breaking these red yellow lines. We're interested in getting back to this blue zone. So let's see it, Facebook. And how much? That's 3 point. Oh, it's about 4% back up there. About 4%. Yeah, so sometimes we do return back to the 127 over the 100. I can see that happening right now as well. We did come up off of that 127, and that sometimes is a temporary barrier to create some sort of spring to try and get any chasers out before we actually get through the first barrier of the bar. 20 seconds till IBM release. IBM preliminary move is upwards. It's eaten alive right now with its huge move right there. Nearly 61% of the way already. Looks like it is 61% of the way exactly. So that's cool. Let's see at IBM. What do you got? More on Facebook earnings than your own earnings? Come on. Not that it was in sync with Facebook whatsoever, but I mean, maybe it's anti-Facebook. I'm just playing. It's not anti-Facebook, but still. At the end of the day, Facebook, Meta is going for its blue bar there. It really wants to see that. IBM, still nothing. Just chilling. Delayed response as well. How delayed was it for these guys? No, it wasn't delayed at all. Delayed whatsoever. Yeah, it happened pretty much right on the nose, except everything that it did release was not. It was just BS. Complete bullcrap. The market just loved it though, because anybody that was long in this environment right there, if they didn't hedge it and take back their positions at the low as I instructed, I mean, it's very specific. But the people that follow those instructions will literally have the best positioning for this environment. And it's like, you have to think fast, you have to be quick. And it's very, I'm like, where's there room for another strategy here? If like, how are you supposed to take all of the movements and not, and still remain like it's the only way that I see to remain in control. Now here we are. If anybody took Facebook, I mean, you're rocking it right now. We're back into this blue bar. We've actually absolutely come right back in there, and huge fan of it. Huge fan of it. I want to see this green dash line. Do you remember this green dash line? I put this in at the beginning of the day, right? And I was even talking about it. I was like, oh, it's miles away, right? And essentially grinding to it could cause a breakout, and it totally could. We're not too far away from it right now. Facebook is still going on all cylinders back to its medium bar, and I think they could shoot right through it, essentially. A little bit of a consolidation at it, but that's not going to affect its ultimate capability of shooting through it at the end of it all. Because every seller that there was in Facebook has been bought back out now. Somebody doesn't give a crap about the earnings. They just wanted everyone to be a seller so they could get in. What I see. And what did they do to everybody before it went up? I mean, everybody was fine in the consolidation, and then they go smack, and it's like, oh, we're back where we started again, except everybody's where? Accumulated into a giant institutional position that they plan on holding without the public? I'm like, why is it why is it so probable that that's the case? You know, I'm like, because nobody that I know, and no human being that I know would ever make this move happen for them, you know? Why would you not just carry it on? If you were short at the beginning, right? Imagine, and it came down, why wouldn't you make it go 2 times as far? Because you're already making money anyways. You know, it's like, so retracing the entire move like that though, who's it bad for? Becomes the question. The people of the node. Which is harsh. I try to find a good way to be able to explain it, but it's brutal for sure. And it does look like it's lost a little bit of volatility as well. The market has kind of calmed down there. There wasn't a hell of a lot of movement. You know, I'm dying for it to actually.
Within the VWAP is what it did. Between my two purple areas there, purple lines on the VWAP.
Okay, yeah, I
Put
can
in
see
earlier,
that.
it never really left either one of them.
I could put those in here real quick. Oh yeah, wow. Okay, I do like that. Yeah, that's really cool. But there's no denying that this channel on Facebook has been very much. I think this is like finishing moves. Like these are moves that say like we're gonna be done with this channel soon. And I mean, this trend is the entire channel. Since the trend existed, it never was capable of actually breaking it into a new channel. And I think that the trend that comes after the red yellow line is subject to taking back this entire move to the upside. And it is getting a little bit of movement right now, funny enough, because it is true that a lot of stocks and options traders that are allowed to trade until 4:15 are not going to be able to be in the mix anymore past this point. It's funny that, ending the day long for both of these companies is probably, or both of these charts is probably the hardest thing that it can be, yet it's the most valuable, in my opinion. And it's like you can count on the fact that most people won't be in on it anymore, and if they are, it's going to be minimal. And it's like if they are in on it now, what are they in on it for? They're in on it for the exposure to Amazon earnings. That's what it's all about. Because nothing's moved, really. Every earnings report that we've done, which isn't many so far, it's only managed to move like this much. Because what did we do yesterday? It was like this much again. It was like the same thing except upside down. And at least that's as I remember it. But yeah, it's probably not moving too much more. I don't want to keep too much of your time. And yeah, no, hopefully it'll be a lot more volatile tomorrow with Amazon earnings. I don't think that this was it was very anticlimactic for sure for me at least. And you know, getting a hell of a move right now though. Holy shit! As I say that, nice. So if you're still long, you're laughing right now. Absolutely freaking laughing. At the end of the day, yeah. It's huge movement. Who is this earnings report right now? Oh yeah, the Fed meeting. The Fed meeting. Yeah, that's it.
That's not for another 15 or 20 minutes.
Yeah, this is report. This is the moment that they cannot trade on QQQ anymore. So be watching this. I find another reversal on this very likely. I think it's going to be huge. 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 I don't even know how to put it. It's going to be huge. This is nothing. This is not even a quarter of what I think it's going to be, actually, funny enough. It's going to struggle at half, like doubling this point. It'll make this into half really easy, though. What we're at right now is going to be half soon. So watch out. Stops kept at the extremes. Facebook blew through the gold bar, though. But now I'm like, well, it needs a new gold bar. And it's potentially, it's managed to make the same freaking distance on both sides. You see that? That's incredible. And I'm like, the Nasdaq didn't do that. It didn't go down as much as it went up. Hardly. It's going to double. No stops are safe above these levels here. Hedges are acceptable, but at the end of the day, the one necessity is the long exposure. I don't care how difficult they make it. It's true that they are fighting for something they value for, and they don't want you in, clearly. So I'm like, well, it's any hedges that you've taken, you want to make sure that right about here you're trimming them off, making sure that they're safe to continue holding. Because at the end of the day, what did we do here? We moved the exact distance out of the bottom of this range that we did out of the top right now, pretty much. The spikes are very similar. And the green dash line, certainly is something that we could use as a support. I'm going to make it into a solid green. Could we test the gold bar before continuing on Facebook? Any hedges want to be kept for sure. As I said, no stops are safe above these levels because we're hitting them exactly where you want to be taking profit on hedges as well. But it's just minimal. Shouldn't cost you your long trade. At the end of the day, it keeps a safety net in the event that it tanks through the ground again. It allows you to be able to capture a long trade a little bit easier than if you just didn't have anything. It means if you don't have anything and you go long and it goes down, you just lose money. But if you're already short and you go long, you're making money while on that short.
They reported 439
Pardon? Who does?
Meta had 439, $4.39 earnings per share.
Ah,
And
yes.
consensus was 342. So they're making
Interesting.
money there.
Giant S wave is pretty much forming on them right now. It's funny that the Nasdaq had these two B points here, right? And they were both hit, but Facebook's wasn't. What a cheeky move on Facebook, though, to do that and then go up to their targets. They really don't want anybody in. It was the moment that the public couldn't trade anymore. The institutions washed everyone clean and then carried on.
They can't trade after hours.
Options and stocks traders, they can't. Well,
Okay.
stock traders they can, but the volume's going to be terrible. Like this is the QQQ, and its volume, it ran up into the close, and then now it's got this. Barely any volume. The trend of the volume has just come off completely. And options traders aren't even allowed to trade, so that's most people right there, because they try to get more leverage on their accounts when they can't day trade. So under 25K accounts are a lot more prone to trading options, and options are far more dangerous. I don't know why they don't just let them trade CFDs, because they might make money. Hedges are going to get attacked. That's okay, so long as the core remains safe. The B points still remain untested above with the trends broken. We can see we're spending time on the green bar, the green line. Another pattern that I've seen a lot lately, which kind of showed up here, is this. Where it's not even, but the second high is slightly higher. And now we're breaking the boundaries on Facebook, getting even farther than the distance that we did originally. And you want to know why I did this to begin with? Is because I know that Facebook will respect going either way. Now, funny enough, it made that difficult first, but those that persisted with it got even more, you could say double, what I was looking for. More than double. Oh, it's like if this was 200, what would be a little bit more than half? The 261? I would say so. That is like a 261 almost. So I can see how particular it was on the movements made by such a large entity that can only trade after the people are out of the way. Like I say, the institutions work hard every day to make sure that people are out of the way. By the time it's interested in moving, significance. And it does that by doing like environments like this where it's tough, 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 tough. Do you know everybody that bought in any of those environments is literally up now? Like I literally put this bar in here too. They like it too clearly, the people that choose where it goes. Because it's not the public. Or else, like it's like if it was the public, it would be easy to find at least one person with the precision that I could show on that chart. Like where it's exactly double for them, like that too. It's just so unlikely. And it's like if it's unlikely for it to even be one person, who could it be then? The people that move the market like that. And you want to know what's funny about those people? What was the last thing that they did? Bought everything that anyone had to sell today. You know they bought the entire day out? They did that. They bought the entire day out. And you know what the day was for each individual? Tough for any buyer. And anybody that was a buyer turned into a seller before it actually went up. Any stops that were placed because of any long trades in this downtrend are subject to being wiped out on this big movement. Yet they were all right to this point. The irony. Why treat them so negatively, you could say? Well, that's my question too. Because it's obvious that it's not one set of group of human beings trading against another, ordinary human beings. It's highly intellectual human beings with incredible amounts of money trading against everyone else. Could call it the composite man if you want, but that's my proof of it. Because the people sure as hell aren't making it exactly even. As I said, I just need one chart where anybody else has figured that out as well, and it's like I find it very, very difficult. So it's likely that they move based off of the inclination of specific entities that are likely on Wall Street. IBM started to have a little bit of an impact on the market there. Facebook also having a little bit of a decline. Yeah, they'll forever be Facebook to me because they're anything but meta, I think. And it's just everybody knows what I mean when I say Facebook. So that's what they'll be from now on for me forever. But in the equilibrium is where we're gonna be here in a second. We've managed to put this much consolidation on this side of the move and this much consolidation on the other side of the move. And we can see that that amount of time has come to an end. We also have a new trend that's likely to break relatively soon. The movements are subject to getting a little bit slower, but we do have that report coming out. Or not report, but the meeting, which I mean, that will be, let's take a look.
That's 1635.
Yeah, but they'll have it on somewhere. Nice to see when they walk on, the market makes a huge move. Not when they say anything, though. It's ironic. It can happen when they walk on it. Definitely gets that aggressiveness back. And now it's interesting to me because they're doing this report at a time where you could assume that their team is all over it. People sure as hell aren't going to be. Can't even trade, so. You know what's funny about this Federal Reserve meeting, right? Can anyone find me a link on YouTube? You know that they do a link every time that they have a meeting? They don't. Like, is that not suspicious? Why don't they want the people to be part of it? No live call? It's like, wait, let's. Yeah, literally, yeah. October 25th. Okay, they do have a thing. They're not out yet. But it started streaming 3 hours ago. Because when the report, or when this stream kicks off, I think that was like a test stream. Might have missed it. Like it says that they have an open board meeting October 25th, 2023, streamed 2 hours ago. No. Yeah, it looks like they already had the meeting, huh?
Yeah, it's done.
Oh, there it is then. Yeah. Huh. Well, with that being said, looks like that's going to be it for the movement there, and tomorrow should be honestly even bigger than today's movement. But any hedges that have been taken, they can be held depending on the parameters of your account. But ultimately, keeping the long with the stop and profit is looking pretty healthy. But at the end of the day, hopefully you guys had a wonderful day, and I'll catch you guys later.
Sounds good, John. Appreciate it.
Yeah, anytime. Take it
See you
easy.
guys.